Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you're having a good holiday weekend. Checking in on the markets here, and we had a little bit of weakness at the end of the day on Friday, which has us looking for the potential of normal, healthy consolidation, which is what I've been personally waiting for a couple days at this point. And as the thumbnail of the video alludes to, some members and some other people have been speculating that perhaps it is company buybacks that are pushing this bounce a little bit further. And here we're looking at Apple. Apple was clearly a lead tech bear out of all the names that we watch in the sector, heading up into the dump, and then we saw the dump, and it just followed through to more significant pullback. So you can see, just comparatively, I'm going to pull up compared to some tech names. This is look at the mid-January action to mid-February, and we compare it to names like Amazon. Amazon nowhere near as weak, and even looking at Netflix, again, nowhere near as weak. With the magnitude of the pullback that we saw, we have so many support levels here. And we could just pull up other names. Even Facebook's been one of the weaker tech names, but even Facebook's stronger than Apple. So my point is, Apple was the weakest tech name that I was watching out of the major names. And then we had a V-shaped recovery. And just like that from the bottom, it is now the strongest name with 3 high-of-the-day closes in a row with gaps and continuation. So the point is that a lot of people are speculating that Apple's buybacks are a reason that we're seeing this V-shaped recovery and that the tech sector has been so strong on this recovery. And that's entirely possible. Just watching Apple in the action from going to lead bear to lead bull in a V-shaped recovery definitely has me believe that there is some buybacks behind that action. And also we had Warren Buffett adding a little bit of Apple as well. So some factors that are leading to this bounce being more significant than anticipated in terms of the amount of move that we saw before consolidation is occurring. So where we stand right now in the markets, because all of these markets broke the high of the bounce attempt from last week, we have broken the lower high pattern on the daily. So now when we consolidate, which it does look like we're about to get ready to do, we will look for normal, healthy consolidation and for a higher low to form on the daily, and then for a higher high and continuation on this recovery back towards that all-time high. The magnitude of this recovery alleviates a lot of fears and concern that the bulls had on this big dump. And even just midweek, it's almost like the dump never even happened. Everybody forgot about it. Everybody's emotional state has been wiped clean, and we're back to being comfortable. So we did see a bearish reversal candlestick form on Friday, and I did enter some puts on SPY. I'll go over that trade at the end of this video. But it was a clear shooting star candlestick with an upper wick. We saw the top of the bounce attempt last week, had a similar candlestick, and then we pulled back. So it shows an upper wick of profit taking, and what I'll be looking for on Tuesday, first thing, with Monday being the holiday, will be a loss of the daily higher lows. We've seen higher lows 5 days in a row, and if we break 272.27 on Tuesday, we will then confirm, okay, we are rejecting from the daily middle Bollinger Band, and now we're pulling back on the daily time frame. So 272.27 and 268.77 are the two support levels that I'm watching first on this pullback. Anything above the 100-day moving average will be a pretty solid higher low. I'd say the ideal scenario would be if the bulls could hold 266. They can hold 266 and form a higher low above that and then head back up to the 270s. That would show a lot of strength. So the weekly time frame on a lot of individual names and a lot of markets is going to be inside bars heading into this coming week. So we'll be watching the high of the candlestick and the low of the candlestick as a key range. And if we do follow through with the pullback that started on Friday, on Tuesday, then we will look to fall further within this inside bar and not see a clear break until mid to the end of the week. So that's where we set up here on SPY, looking at the Dow. Very similar. We broke the lower high pattern. We rejected from the daily middle Bollinger Band. It's a bearish reversal spinning top candlestick. Support, if we break 25,149, we will lose the daily higher low pattern. Next support level after that is 24,809. Those are the two levels that I am watching. Watching for the higher low to be set here. Again, anything above the 100-day moving average will be a pretty solid higher low, but the bulls ideally would like to hold 24,600. Weekly time frame, inside bar, same scenario as the S&P 500. IWM, Same thing, got a big bull move. We rejected from the daily middle Bollinger Band resistance. We have an upper wick of profit taking. Supports to be watching are 152.54. If we break that level, it confirms we're in for some consolidation on the daily. And then 150.56 is the next level. Ideal level for the bulls to hold, I would say, would be 149 to be their strongest, trying to form a higher low on the daily. Weekly chart, not an inside bar. So the bounce is a little bit more significant here, and it's not an inside bar for IWM like it is for the Dow and the S&P 500. VIX. So VIX is establishing a little double low, and this is an area where this is an area that we would call it a bottom fishing play. We have support of 1760 and 1744. So if making an entry in VIX on Friday, a stop would go below 1744 to stay protective, but to be looking for the market pullback to lead to a small bounce here on VIX, and for a lower high to form, likely under $25. The bears definitely have control of VIX, again, because we formed that lower high and lower low that shifted momentum back to the bears, and that showed the strength that the markets had on this recovery. So resistance is going to be 20.99 and 25.72. There's certainly still space to the upside if we can get some magnified pullback in these markets, but if we don't see any kind of break of those daily higher lows on the markets, then we're not going to see VIX get much follow through on this move. So checking in on the weekly time frame, inside bar on VIX as well. And if we see bull breaks of the markets, then we'll likely see a bear break of the inside bar on VIX. So here's the SPY trade on the end of the day. And how I've been heading into the end of last week, both Thursday and Friday, was I'm not comfortable going bullish in this scenario. I'm waiting for a pullback on the daily time frame. The risk to reward does not favor the bulls at these levels. So if I do not see a bearish trade that I like, I'm just going to be sitting on my hands. And there were obviously other sectors to be playing. I was trading the Canadian MJ sector for some oversold bounces. But other than that, I was not going bullish on any names, even though the trend was still favoring the bulls. I was just setting up and scouting for bearish entry opportunities. I made a bearish entry on Thursday that ended up locking in some small profit. I was ideally hoping to swing trade some puts on SPY, but ended up just locking in that small profit because the bulls turned around the momentum. And then I did the same thing again on Friday. As soon as we saw this big 20-minute dump, I said, all right, I'm going to initiate a bearish entry on the bounce here, and I'm going to put a stop loss at the high of the day. If the bulls see a new high of the day, I'll exit the trade and then be at a fresh clean slate heading into Tuesday. So I entered the bearish trade. On this initial dump, I locked in half of my profit and then let the rest ride the rest of the day because we did not break this level. Had we broken this level, I would have exited all of my position and been back to all cash. So I'm currently holding half a position of 275 puts heading into this coming week. And if we do see downside on Monday, I'm going to be fairly quick to lock in this profit just because I'm not a swing trader. I'm a day trader, and I will lock in that profit if we do see a solid red day on Tuesday. And I'm not going to try and, go for the home run and hold it all week. Although we'll see how the action goes. That can certainly change. And then just to rewind it to Thursday's action to go over the short trade there. On Thursday's trade, it was here establishing a tight range of support. As soon as we lost the low of the day in the morning, in the late morning, that was a bearish entry opportunity. We dumped down. I took partial profit again. Wanted to hold overnight, but as soon as the bulls started seeing this V-shaped recovery, I covered the second half of my bearish position and went back to all cash. So that was what I was preparing to do on Friday as well, but fortunately was able to keep a little bit with that weak close the last 10 minutes of trading. So we'll see how it all plays out. Again, bearish reversal candlesticks on the markets. They need to break the low of the day to confirm them with another solid red day, and we'll see if it plays out on Tuesday. I appreciate you watching. Have a great rest of your weekend. We'll see you soon.